Hey, welcome back to the Daily Dive. Today we're joined by Tim Seymour, Chief Investment Officer of Seymour Asset Management. But before we get into it, don't forget, like, subscribe, and hit that little notification bell. Hey Tim, welcome to the Dive.
Great to be here, Cassandra. Pleasure.
Okay, so let's start off talking about cannabis. When you're looking at operators to invest in, how do you go about your diligence?
I think for cannabis, the driving, I think, fundamental that's been most important for the industry over the last couple of years has been balance sheet and bottom up. I think first of all, just to see what the balance sheet looks like, to see what the capital base looks like. Obviously, there's plenty of other fundamentals within the sector that on a bottom up basis you care about. But I think understanding really who has the runway to actually build a business in a high growth industry. I think understanding the capital base has been important. And then, look, obviously profitability. So the income statement in big, bold kind of financial terms, balance sheet, income statement, both very important. And profitability within the sector is proven to be critical and essential over the last really 15 months or so. Before that, I don't think anybody cared. And it was really about growth at any cost and pie in the sky. But if the companies don't make sense fundamentally bottom up, we all know what's going on top down. It's an exciting time, but a lot of money's been wasted. A lot of capital's been eradicated, and I think investors need to spend a lot of time on the bottom up.
Do you have a preference towards the size of an operator you invest in?
My investment kind of participation in the sector stems from being involved in private companies, very early stage companies, all the way through to the biggest public companies. So I'm somewhat agnostic, although I'm not agnostic relative to the underlying product. I run an ETF, CNBS, as you can see behind me. And so we're obviously investing in some of the biggest companies in the space, the listed ones, and the ones that are federally permissible for us to invest in. On the hedge fund side, in my JW Asset Management perch, we're investing in new stage companies. Although I'd say we're less focused on VC and angel round investing than we are really looking at companies anywhere from Series A to later stage investment. I think we really care, and I think as far as investing in cannabis, the opportunities for investors are across the spectrum. The industry is far from beyond a place where we still all feel like we're in the early stages. But even for the most advanced companies, the largest companies, the ones that the handful of those that are north of 5 billion, those are companies that are also going through their next phase of investment. And frankly, some of those re-rating moments and catalysts are things that are still ahead of us and make those companies very interesting as well.
How are you forecasting the cannabis regulatory environment playing out in the U.S. under Biden leadership?
I don't think it's going to move quite as fast as people seemingly have, recalibrated their expectations from the Georgia runoff, and where really we started the year on the sense that now with the Democrat-controlled Senate, a fast track to descheduling to a full federal environment are things that can happen quickly. But let's be really clear: the last 12 months for cannabis, in quick review, include not only multiple new states coming online, including conservative states in the U.S., where there really wasn't the type of constituency within the Senate historically to even support the type of legislation that people might see coming through. But you've had an enormous change in terms of what is the building block for getting cannabis to where most people within the industry want to see it go on the fully federal side. The fact that the House voted to deschedule and for federal legalization, even though that was going to be dead on arrival in the Senate, that was a very big moment in 2020. And the number of other legislative advances, I think, for the sector are part of this building block. What's been clear through the dynamics around fiscal in the country, and where cannabis clearly is getting a lot of tailwind for legislation on a state-by-state basis, because it is going to be this source of found money for a lot of states, but even on a federal level at some point here. Clearly, that's part of fast-tracking legislation. So look, some of the most important dynamics for investors in the sector, really more around the capital markets dynamics of will the companies be able to properly bank, access capital markets, so therefore lowering cost of capital, listing on the exchanges in the United States for U.S. plant touching, and obviously, just to the extent that you're going to see this re-rating that might come with big institutional investors come into the space. I think there's a possibility that could come sooner than later, and I think that's less complex than it is getting 5 or 6 federal agencies to work together to get legislation that really get where we want to go. I think the sweet spot for investors may be before federal, frankly, but maybe where if you were to get the exchanges, to get the capital markets dynamics solved, and you could have just the prospect of the companies that are here now and the growth, and you bring in more institutional capital before the FDA and the DEA and FinCEN and the IRS start to screw it up and make it a lot more complicated and not as straight of a path for companies. I think that's something we should all think about.
So we have to ask you about beverages. Do you think this will be an emerging category at some point?
Yeah, I mean, I think it has to be. It's hard to know what adoption will look like in the beverage space. I think, especially when we're looking at different form factors within the THC space, evolve in somewhat predictable and non-predictable ways. That flower is still where the dedicated consumer is focused, but concentrates and edibles and obviously the vaping dynamics changed in the last 18 months. Although I think that's going to continue to grow as a category again, especially as we get a little bit more clarity on some of the things that are holding it up. But I think beverages are an exciting area of growth. I think ultimately the consumer is not exactly sure how to deal with THC infused beverages in a bar setting or at home, or I think socially we're all kind of evolving on the fly here. I think the focus within the core operators right now, or some of the larger players, or at least U.S. players with a footprint, and where beverages could at some point become part of it. Again, some big issues with the FDA right now, but I do think that it's a segment that's certainly very exciting, and we'll see where consumer tastes go. I own a bar in Manhattan downtown, so I kind of hope that the cannibalization doesn't completely change the way the spirits industry operates. Kidding, but not kidding. I do think that as a segment, it's going to grow. It's hard to know where the market is going to take it, but there's no question people are going to want to consume these beverages, and there's no question that these beverages will be. Look, I drink Coors Light because I like to microdose, right, when I drink, and I can drink 10 of them, and I think that's, again, does somebody want to be drinking a THC infused beverage that's their equivalent of a light beer? Do they want something that's a heavy hoppy beer? These are things that I think we're going to figure out.
So what do you think some of the biggest myths are that cannabis companies tell investors, or you hear from investors when they talk about the cannabis sector?
Biggest myths are that they have a brand, maybe. Everybody says they care about brands. It's not that they don't care about brands, but the question remains as to really what is the brand. and who has a brand at this point? And is the brand the product? Is it the retail footprint? Is it the distribution form? Is it ultimately is it actually the the growth process and the quality of the grow, I should say. So I think be careful when someone tells you that we are the brand. We are one of the biggest brands. We are, a well-known national this, national that. I think that's part of it. I think the competitive landscape is still very difficult to know. So we just got done talking about federal trends on legislation. I don't think anyone who's got a well-established, certainly an integrated cannabis business in the United States is all that excited to see a full federal environment, and also one where obviously interstate commerce is going to be wide open. So I think the moats around a lot of these businesses are still not entirely clear, even though some may look pretty clear right now, especially in limited license states. So I think some of the misperceptions just for investing in the industry are that your investment returns are a function of the best fundamentals. And I think this is no different than investing in other sectors. I come at investing in cannabis from being an emerging markets investor and investing in parts of the world where at times they were also very illiquid marketplaces. There was a lot of federal restrictions or national restrictions or foreign restrictions on capital, where there were young immature companies. Sounds a lot like cannabis. So the point is that I feel like I've seen evolution of new and emerging asset classes, of which cannabis is one, and that the returns are sometimes a function of the top down, the bottom up, and then the technical factors around where is money going to flow and how can money flow. So I think that's very important. I think investors really need to do their work on understanding who they are investing in, and whether they're investing in a fund, whether they're investing in a particular company. We've talked a little bit about that, but that ultimately, what is the advantage and the edge of that fund manager or that entity in being well positioned to not only understand the top down, make asset allocation choices for the bottom up, find the best companies, know the CEOs, know the industry players, and then know where the capital is going. Because I think that's part of it too. What everyone who's been following cannabis for the last 3 or 4 years knows is that the dynamics between Canada and the U.S. have had a big determination on who's made money and how people have made money, and at times, when to trade one against the other. And I think investors need to really pay attention to that stuff.
So being in New York, where institutions generally frown upon investing in cannabis, do you have any sense of how the conversations have changed since Biden and the Democrats took control?
I think that the conversations changed for institutional investors in New York or the East Coast, or really, almost anywhere. I mean, I have to say that institutions care a lot more about. I don't think there's really an approach to investing that's based upon a political view or whether they are believers in the industry. There's always going to be some question and debate over the size of the industry and the inherent profitability in the industry. But I think, most importantly, investors are more concerned about what can I invest in? Do I want to be allocating any capital here when I have still some risk of reprisal, whatever that might be? But I have a fiduciary responsibility, depending on who my investors are, whether they are a pension fund or an endowment or just institutional investors that are funneling into a U.S. institution on their behalf. Those, I think, are the biggest issues. So for New York-based institutions, so whether it's folks working on Midtown, biggest hedge funds in the world, and I think a lot of them have already made allocations to cannabis. I don't think, again, I tend to think that the the perception changes that have come in the industry, some of them have come because the sense was that the political climate was so much more advantageous. So therefore that brought institutional investors on board. I don't think that the perception change or the institutional interest in cannabis is really the change in the White House caught people's attention in terms of what it could mean for the timeline for the industry to continue to find this federal re-rating path. But I feel like there's a lot of institutions that have been also just waiting for the size of the industry to grow. Remember, institutions sometimes have capacity constraints. They have a lot of capital to get through the funnel, so to speak, and it really has been kind of a funnel. So I think they're waiting for capacity. I think they're waiting for proven operators. Traditional institutional investors are less risk tolerant than family offices and private banks and ultra high net worths or high net worths who have been the early stage investors in cannabis. So I think those are the things to watch.
Okay, last question here, Tim. Do you have any investments in the psychedelic space?
I don't have any investments in the psychedelics. I will say that I think the world of healthcare, but mental health and innovation in that sector from a treatment and the biopharma perspective is a fascinating area, and an area that already has had a big move. A lot of people assume it's a similar group of investors that are investing in cannabis that might be investing in the psychedelics. I certainly know a handful of the companies in the space, and I think they're well on their way to some, the next phase of possible either strategic participation in the sector from the biopharma perspective. Clearly, there is this. A lot of these companies behave much like biotech stocks in that they're pre-revenue. They have potential, multiples on them that might not make any sense right now, but they also don't make a lot of sense for a lot of biotech companies. So I think it's a fascinating area, and I think if you look at even the GW Pharma, Jazz Pharma transaction, it shows where the complementary nature that cannabinoid science plays for a neurological platform and pipeline at Jazz, tells you where I think bulge bracket pharma, biotech are going to also go in other areas. So cannabinoid science for sure, in the psychedelics and mental innovation and treatment for various types of mental health issues, I think is picking up steam, not a flash in the pan. So exciting times for those companies as well.
Well, Tim, thank you so much for joining us on the show and sharing your insights with us today.
My pleasure. Great to be here.
And for our viewers at home, don't forget to like, subscribe, hit that little bell. You can follow us on all of our social media platforms. They're listed below. I'll see you next time on The Dive to talk all things small caps.